Pakistan's economy remains trapped in a cycle of low growth, even as some macroeconomic indicators show improvement. IMF Managing Director Kristalina Georgieva warns that lower-income countries like Pakistan remain highly vulnerable to economic shocks despite ongoing reform efforts. Global factors are also adding pressure. Last Monday, oil prices surged by 2%, hitting a 4-month high. Stricter U.S. sanctions on Russian oil are pushing major importers like China and India to look for alternative suppliers. Ms. Georgieva emphasized that structural reforms are critical to achieving sustainable growth and protecting economies from these risks. Amid these challenges, Pakistan is focusing on boosting regional trade. Just last week, the FBCCI and its Bangladeshi counterpart signed an agreement to establish the Pakistan-Bangladesh Joint Business Council. A Pakistani trade delegation also visited Bangladesh to explore new opportunities. Meanwhile, Azerbaijan is strengthening ties with Pakistan also. Plans are in place to set up a trade center in Lahore and a chamber of commerce. Direct flights have already tripled trade volumes between the two countries since 2022. Efforts with Iran are also moving forward. Pakistan recently opened a fourth border crossing in Balochistan's Kohak-Chikdi area. This aims to boost legal trade and curb smuggling. A barter trade system now allows Pakistan to exchange rice, textiles, and meat for Iranian petroleum and raw materials. Talks are also underway to extend Iran's electricity supply agreement, which currently delivers 100 megawatts to Balochistan's border areas. In other developments, Pakistan and Iraq have signed a protocol to explore bilateral economic cooperation. Finance Minister Mohammad Aurangzeb has been in talks with Hong Kong officials about joint ventures and secondary listings. And soon, Indonesia's president is expected to visit Pakistan with an investment team. Domestically, there is a pressing need to reduce reliance on debt finance imports. For example, local edible oil production only meets 11% of Pakistan's demand. Experts at the Pakistan Oil Conference have emphasized the need for palm oil cultivation to cut dependency on imports from Indonesia and Malaysia. Additionally, analysts are cautioning against over-reliance on remittances, which exceeded export earnings in the first half of this fiscal year. While remittances are vital, they cannot replace exports or foreign investments, both of which are critical for sustainable economic growth. The challenges facing Pakistan's economy are significant, but so are the opportunities. The country's focus on regional trade and boosting local production could pave the way for a more resilient future. For the full story by Javed Bukhari from Dawn's Business and Finance Weekly, click the link in the description below.